I didn't get this trade recorded, but my thought for the trade and just for the open of the day was that we had a climax to end yesterday and potential final flag. So I was looking for a second reversal up from here, and we had a quick plunge down, and then we had a second entry here, first entry, and then pullback, and then second entry, or you just see it as um, a move up and then sideways, and then a breakout of that flag. I was hesitant because I was looking for something down here, as double bottom and an entry down here, and so I hesitated. I didn't know if I should take it, and then when I decided to take it, I was a bit late, and so I ended up buying high. And as I thought about it more, I just decided to get out. So I ended up taking a 19-cent loss on 10 shares, so I lost $1.90. I just couldn't make up my mind, and by the time I had, it was too late. It would have worked out. It would have gone up 20 cents for a scalp, but I just ended up buying too high, and then when I thought about it, decided to just exit wherever the market was, and ended up losing 19 cents on it. I bought the close of this bear bar, betting on a bear trap after a very tight channel up, 11 bar bull micro channel after a final flag, or potential final flag. So betting that that is a trap. It just got filled there. So my thought was that we had an 11 bar bull micro channel after a potential final flag, and then we had a give up bar to around 50% of the range. So I usually like to buy that close. I did the same thing. I think it was on the 13th. Oh no, I was here on the 16th. So I bought this close, and this one didn't seem to work out as cleanly as I normally like. And I asked Al what he thought about buying this close, and he said that buying the close is a reasonable strategy when the channel up is tight, and also when the context makes it likely that we should get a second leg up. So after this was a tight channel, but the context didn't make it likely that there's a second leg up. Today we broke down from the final flag, and on the Globex chart we have 3 clean pushes down. So I thought the odds were that we need to get a second leg up, and so I thought today was better than my last trade where I bought the close. I thought it was reasonable to buy this close today. So I made $1 on it, so down 90 cents now. I bought this bear close, 3 bull bars up after a climax. I was waiting. I didn't want to buy above this signal. I thought we'd get one more leg down. But instead of getting the leg down, we got a really strong rally, so 3 bars up. So I thought first pullback will be bought. And I also think that even if we come all the way down here, we'll try to form a second reversal because of how strong this is to the upside. So I have my stop at measuring move down from this rally. So even if we do come down here and get a second reversal up, I'll buy above that. But in the meantime, I thought that there'd be buyers below this bull rally. So I bought that close as soon as it closed, looking for 20 cents. I'd be out right now. I have to find a better way to do this because when I buy at the market, I often get slippage. So this bar closed at 319.80, and when I hit buy the market, I got filled at 319.84, so I lost 4 cents. And it's not a huge deal, but if it's happening right now, I mentioned this before, if it's happening with 3 shares, it's going to happen with more often with larger size. So I got to figure out, maybe I have to buy with a limit order at the low close instead of buying at the market. I definitely have to find a better way to do that. But I just got filled there for 3 shares, so 60 cents. So now down 30 cents. It'd be nice to get a second entry buy somewhere down here. Then I can be less cautious and trade bigger size. But because it was still a climax, we could have gotten a deep pullback. So I wanted to make sure I had a wide enough stop, and so I had to trade smaller. So if we do get a second reversal up from down here, then I'll buy that. And I'm on trade 499 right now, so one trade left. It'd be nice to finish it today. Obviously, I won't force anything, but if I get my last trade today, then I have the weekend off, take a break, and think about the next phase, and increase my share size probably to risking $20 per trade or $25 per trade. I haven't decided. I don't know if I have enough capital to be able to risk $25 because I have a $5,000 account, and so in certain situations, if the risk is 20 cents, or the trade recently, like buying above the signal bar, it's a 30-cent risk. So I need to be able to trade 80 shares to risk $25, and I can't. I can only trade 50 shares max. With margin, I have a $5,000 account, but with margin, I have $15,000 buying power. So with shares, I won't be able to risk 25. Even probably 20 will be tough. So I may have to switch to micro E-minis, but I'm not. That's a big jump. Like I have to get new data and start looking at new charts, which may be a little bit different in terms of. I noticed that sometimes a bull signal bar triggers on the SPY, but it doesn't trigger on the E-mini. I haven't really looked at the micro E-mini, so I'm not sure if I'll have the same problems there. But I definitely will need to look into it. I don't know if I can. I don't know if I can risk 20 or 25 with the SPY. So I'll have to calculate it and see if I need to make the switch over to E-minis or micro E-minis.